Hi, this is Mark Iden with HONU Trading with a weekly review for next week, August 28th, 2023. First and foremost, a disclaimer, education only, not recommendations to buy or sell. Know your time frame and risk tolerance. I recently did a video on Twitter for time frame and the importance of knowing which is your favorite time frame and therefore defining your risk tolerance. Also, never forget job one is risk management. Follow me on Twitter at HONU Management, at HONU MGMT. So today's agenda, it's the Kobe Bryant market. Kobe, God bless him, was the master of the head fake, the pump fake, and sure enough, we've got inside weeks and hot messes galore. The heat map definitely had a mixed look. The biggies clearly bullied the smalls this week, as we'll see on both the heat map and on our relative strength cap weighted versus equal weighted indexes. However, risk on remains in effect. Sector review, it's a mixed bag. Kobe'd be proud. Earnings next week, not a mucho, and pre-Labor Day trading, as they say in the Deep South, y'all be careful now, you hear? So the heat map for the week, you can clearly see that the big boys, Apple, Microsoft, NVIDIA, Google, Tesla, Amazon was flat on the week, but the big guys definitely outdid the little guys. Here we have the equal weighted S&P versus the cap weighted, and that's almost breaking down to new lows for the cycle. The Qs are holding up a little better, equal weighted relative to cap weighted, as are the mid caps, but the small caps, they're almost breaking down to lows for the sector, lows for the recent year anyway. Risk on definitely still remains in effect. Hat tip to Chris at Chiavaco Capital. This is the S&P 1500. That's the 500 big cap, the 400 mid cap, and the 600 small cap, all in one index, which are cap weighted relative to 3 to 7 year treasury bonds. Now, stocks will almost always outperform bonds over long periods of time, but in this context, they give us a very clear risk on, risk off kind of indicator. Now, there are long periods of time when they can go sideways and not really tell us anything. Here back before the final rally into the COVID highs, here for basically most of the past year. But when that index declines, in other words, stocks are being sold relative to bonds, that's a clear risk off indicator. When stocks are being bought relative to bonds, that's clearly risk on. And here we see the 2022 bear market, clearly risk off. Towards the end of that, not much of a signal. But recently, we've had, as of June, risk back on, breaking out to all-time highs and still holding above that despite a pullback. For our sector review, we're going to look at the daily time frame. I'm going to start with XLY, which had very clearly an oops reversal above the previous 52 weeks high. By oops, I mean a breakout. Again, Kobe'd be proud. It turns into a head fake and therefore a fake out. Now, I'm going to spend a little bit of time talking about how the moving averages clouds are structured, because you'll see this material again. The 20 is above the 10, and that is above the 50, which is the upper end of the blue, and that's above the 200. So totally mixed bag in here. Inside week on XLY, not really telling us much of anything there, but these moving averages, what do you draw from that? Hot mess. XLE has been holding up a little better. It is now above the 10, above the 20, above the 50, above the 200. All of those are stacked in the right direction. That's probably the most relative strength performing sector. Tech is actually the best performing sector on the week, although it is also a total mixed bag and had a big gap and trap on Thursday when NVIDIA reported. More on that in a minute. Today's almost an inside day, but these moving averages are just a hot mess. Industrials, Same thing, just a hot mess. Still holding above the previous 52-week high, but the 10 below the 20, right at and below the 50, and above the 200, flirting with making this entire thing an oops reversal. Basic materials, hot mess. I mean, totally stuck in this range, 10, 20, 50, 200, yuck. Communications holding up, 10 below the 20, recent 52-week highs, but right at the 50, kind of violated that. Lower high, negative, oops, reversal. Healthcare, hot mess, nothing to see here, move along. Real estate, still trying to circle the drain. 10 below the 20, below the 50, below the 200, yuck. Basic materials, same circumstance, but perhaps even worse. Utilities, totally circling the drain, haven't hit a new 52-week low yet. 10, price below the 10, 20, 50, 200. Financials, they're kind of a mixed bag. They've had a series of higher highs. This looks like a giant oops reversal. Moving averages, this is now just a hot mess, and we're within this range where Silicon Valley Bank failed. Bitcoin, yeesh, that's had an ugly week. Bonds, totally circling the drain. The 2-year yield is flirting with new multi-year highs, as is the 10. It's pulled back some, but this would be a multi-year high. As far as earnings next week, there's not a lot going on. You've got HPQ, you've got HPE, CRM in the Dow, Crowd, Vive. I don't really see much of anything else here. Broadcom, BMW, but really not a lot going on with earnings. And that really kind of fits with the pre-Labor Day holiday week theme. So here's what we've covered today. The Kobe Bryant market, inside weeks, hot messes galore. Heat maps had a decidedly mixed look. Biggies definitely bullied the smalls. The good news is risk on remains in effect. Sec review, it's a mixed bag. Kobe'd be proud. Not much going on with earnings next week. Pre-Labor Day earnings. So y'all be careful now, you hear? And I'm going to keep up the theme with the humor towards the end. Here you got 4 bears arguing over who gets to eat the fat hiker. So as my buddy HONU always says, small losers win.
Lakers looking for their 7th win of the year. Kobe with a dozen points. How about that?
Shannon coming to Kobe Bryant.
Great first quarter for Kobe. Look at Shannon. He knows it too. Head down, walking.